Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Monday, February the 3rd. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Also, don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So first things first, guys, my voice seems to be going a little bit, so if I sound a little bit hoarse, I apologize. I'll do my best to get through this video intact. Also, I'm going to try something different. It's actually really difficult for me to do these videos on a 4K monitor and shoot them in 1080p because everything looks so small. So I'm going to shoot this video in 2K, and then hopefully it looks good when I upload it to YouTube. They're going to obviously put it in an HD format. If you guys have trouble watching it, if it looks blurry or if it's tough to see things on your particular monitor, if you're, for example, on an HD monitor instead of 2K or 4K, please let me know, and I'll make sure in the future to stick to the 1080p stuff. So let's talk about Bitcoin. Obviously, yesterday was the weekly close, and it did about the worst thing that it could have done. Okay, let me explain why. It closed right under the weekly high, so that neither gave us a good bull signal where we could say, okay, we've broken this downtrend, we've closed the weekly high, but it also didn't give us a good bear signal where it had a harsh rejection. We could say, okay, that was it. Instead, it did this BS thing where it closed right underneath it, and now we have to wait for a whole nother week before we're going to know whether or not we have a higher close or not, which is just not great. What can we do about it? Not a lot, guys. Not a lot. Unfortunately, it's just the way the cookie crumbles sometimes. So I'm stuck waiting another 7 days to find out where the weekly close is, unless price suddenly dumps between now and then, or unless price starts to pump really hard and breaks through some key levels. Like I said in yesterday's video, which is really only about 12 hours ago, one thing that I will be watching is this green line, which is the neckline of these M's. I do feel like if price closes on a daily candle above that level, I think it's going to probably go up quite a bit. Maybe on a short squeeze, maybe not, right? It may just be that the bull run is kicking off. So I will be watching that with a pretty close eye. And it's a little bit uncomfortable to go to sleep right now with, the market the way it is. It feels like one of those times where it's getting ready to screw somebody, whether it's the bulls or the bears, I don't know, but it doesn't feel great. We keep getting up to $1 billion in open interest over on BitMEX. We'll have these big, stop hunts, and then it goes right back to $1 billion again. We had one earlier today. I'd actually posted on Twitter. This line was not here. Basically, I had posted about this upward trend line. This is back in this area here. And I had said, hey, look, if it can break through this red line and close above it, I think bears are going to get punished. Otherwise, I think it's good news for the bears, basically. And it was funny because this started pumping really hard. And I think some people wanted to get a little bit fresh with me, saying that it's already through that line because it was actually way up here. But see, that's just a lesson, guys. You got to wait for the close. It doesn't matter where it's at during the candle. It's where it closes at that matters. And you can see that in the end, all it did was run up and test that upward sloping trend line from the bottom. It was a bearish retest. Also, if you zoom into a 5-minute chart, we'll go over to a Coinbase chart so you can see this. There was a massive reaction to that pump, right? So it started pumping, and I was watching this, and volume was climbing 100, 200, 400, 600, 800, and finally 823 Bitcoin in a 5-minute candle. But you can see a couple candles later, the bear said, hey, what's up? And slammed it back down with 1.3 thousand Bitcoin volume, almost double the volume of this candle here, right? And since then, it's just been consolidating sideways. Now, I'm not confident enough to take a long here. I'm not confident enough to take a short here, right? Other than still being in my spot with the hope that I'm stopped out, which sounds funny. But, I do want this to go back down. I don't want it to go parabolic. It's bad for the market. It's bad for me. And it's very difficult to, feel comfortable taking large positions in a parabolic market, because when they correct, they tend to correct hard. And you end up losing a lot of money, right? And people say, oh, just use a stop loss. The problem is you get this kind of stuff. Parabolic markets lead to this. This was a 3.5% move up, and then a 3.5% move right back down. all within a half an hour. So if you were sleeping in here and you had a stop loss, good chance it got hit, right? Or if you're at dinner, or if you have a job, whatever the case may be for you. So some really funny business going on right now with Bitcoin. Okay, let me turn over to my other computer here. Looks like interest, open interest on BitMEX right now is at 1,001,889,760. So pretty high. Okay. So what do I think is going to happen? Well, I told you guys yesterday that I've probably never been more unsure of what's coming in the market, but I tend to lean bearish. Okay. The more I look at this, let me show you a few things. So on the daily chart, I feel like we do have this channel that we're in. I feel like it's this upward sloping channel. And I feel like as long as this channel holds, that this probably is a new uptrend. But if we start falling at the bottom of it, that story changes. So when I say that I'm more bearish right now, what I'm really talking about is I want to see what happens if price can come back down to this middle of this channel or to the bottom of the channel. That being said, what's very interesting is that pump last night, it does make me lean more toward this idea that this is actually a rising wedge. Okay, so if this is a rising wedge, what you have is this big down move with a rising wedge. You have volume starting to get lower on the pump. Rising wedges are bearish in nature, okay? And again, they tend to break south. So that's another reason that I'm bearish. Now again, doesn't mean that we're suddenly going to go down to $500 or $1,000. The way you look at a rising wedge is you simply measure it from, the beginning there to the bottom over here. So you get this target, it's around $1,000. Talked about this last week. If it falls out the bottom of it, it's going to give us a target down around $7,800 to $8,000. Just lines up perfectly with everything else I've been talking about the last week, right? It would look something like this, down around 1,700, and then if it went back up, you'd have an inverse head and shoulders. If it kept going down, then I believe wholeheartedly that we would take out these lows, okay? But we'd have to see what happened at that level right there. So that's what I mean when I say that I'm bearish. I think that we have to play it level by level, see what happens. If it starts to pull back, what happens at each level of support? Is it going to cut through that support and keep going down, or is it going to find support and bounce off of it? Just like when this was moving up, it should have been played level to level, right? When it got up to this level and broke through it, came back down, found support. Then it moved up, started to pull back, got down to this level, fell through it, but then found support down at these closes, bounced off of it, went up, started to pull back, found support at this level the first time right here, and second time and third time. Okay, how many times is that support going to hold? I don't know, right? 3 or 4 times, getting kind of sketchy, but we'll see. If it breaks through that again, I'm just going to watch it and see how it acts as it moves down through those levels. So that's what I'm seeing on the daily chart. On the 4-hour chart, the main thing that I would personally watch for is what I mentioned just a few minutes ago. It's this downward sloping RSI. Just like in past videos where I've talked about RSI trend lines, if this closes above this trend line and if it breaks north of it and closes, you typically get a pretty parabolic move. It's like people get excited because it closed above the line, they go long, and you'll see this thing pump up, and it could be that it pumps up, $500 or $1,000 even, right? Sounds crazy, but if it breaks through this line, it wouldn't shock me at all, right? Suddenly we might be looking at $10,000 Bitcoin. Does it mean that, it's going to keep going up from there? Probably not. It'll probably stop somewhere around that point and then finally dump, right? But by then, most of the barriers will be washed out, and you'd have all kinds of people FOMOing in. So kind of one of those max pain scenarios. But I will be watching this. If it breaks north of it, I'd be tempted to add to my spot long position. Probably won't take any leverage trades in the next few days unless something just magical pops up other than day trades. But that's what I'm seeing on Bitcoin. All right. As far as altcoins go, let's take a look at the altcoin charts. We'll go over to total market cap 2. Remember, I mentioned yesterday that we'd already had a higher weekly close in the alts. So I already feel like the alts have broken out of their downtrend. And I feel like at this point, mainly what we're waiting for is some type of correction. That's what I'm waiting for when it comes to alts. Okay, I want to see if we can get a correction, and I want to start looking for buy signals inside of golden reload zones. That's it, right? Not a whole lot else going on. This is the 200-day moving average. We broke through it, had a very nice clean retest of it. And, I feel pretty good about the alts. Okay, I just don't want to invest in stuff that's already pumped 100 or 200%. I'd rather wait for a retracement. If that means I miss some of the alts, it's perfectly fine. Right? There's plenty of places to get my money in good. I don't want to chase. Okay, I've talked about this in the past. I used to play poker for a living, very short amount of time, maybe a year or so, before it became illegal in the United States, online poker. And you could play a terrible hand of poker and you might win once in a while, but you lose more often than you win, and over the long term you end up losing money. So yeah, there are going to be some of these alts that you probably could buy them after they pumped 100%, and they might keep going up. But there's probably going to be 9 other alts that you tried that with and they dump. So better safe than sorry for me. You do what's best for you. Okay. So again, what I basically want to see with alts, want to see retracement back down around the 61.8 fib. Okay. Down around that $62 billion area, that would be perfect. As far as the total market cap without the alts, yesterday's close ended up pulling way back down. So it was getting sketchy there for a minute, but it did end up closing a higher high. All right. So this high over here, 245 billion. This high over here closed at 254 billion. So we have officially broke the downtrend, or at least the bearish structure of the downtrend on the total market cap, which means these trend targets are no longer valid. Okay, at least not in my mind. I don't consider them valid at this point. So instead, what I have to do is I have to wait and find out what my new trend is going to be. If this is an uptrend, then of course uptrend dips are for buying. If it's a downtrend, then dips are actually falling knives and we want to stay away from them. Instead, we want to be looking to short the rallies in a downtrend. But right now, all we know is that this is broke up and that it's broke our bearish structure and it's broke out of our downward channel. Looks a whole lot like an uptrend to me. To confirm it, we just need a higher low, right? We got a higher high. So if this thing can pull back and punch in a higher low and then start back up, and essentially, for me, a higher low, it's tough to call, right? Some people are going to say as soon as it starts moving up, they're going to consider that the higher low. For me, to be absolutely safe, I'd want to see the next high. So you got your high, your higher low, and then a new high breaking above this. That does not mean I'll wait to take a trade. Let me be very clear about that. I can still take trades down in this area and just use stop losses. But before I get super uber bullish, where I'm like, yes, this is definitely an uptrend, we're definitely in a bull market, this is what I want to see. I want to see the higher low, and I want to see the higher high. So the next thing that I want to address real quickly, because I don't remember if I talked about it in yesterday's video or not, but somebody asked me a question that made me think I probably didn't talk about this enough. So I want to cover this real quickly. I talked about the 19-week moving average yesterday. All right, so one of the things I said about the 19-week moving average is it's often a really nice place to go long when it comes back and touches it in an uptrend. Just to be clear, in case you guys don't understand, one of the easiest ways to spot an uptrend is to watch the moving averages. And once most of them start turning up, right, the ones that matter especially, that's typically what an uptrend is. So for example, they asked a very legitimate question: why am I excited about Bitcoin breaking above that line and buying above it when it did this in 2014? Well, the answer is I'm not excited about it, right? Not yet. I'm just watching it. It did break above it and it did ping off of it as support. So that does make me think, that we have a potential bullish run starting. The reason that I'm not automatically like, okay, let's get bullish, let's start putting in a bunch of money into Bitcoin is because it's not turning up, okay? So if you look at this was a false break above it, but see, one of the telltale signs that this might have been a false break was the moving average was actually turned down. It was moving down, started to move sideways, and then barely started to turn back up when it collapsed, okay? We're seeing that same similarity start right now in 2020. It's turned down, and we don't know what's going to happen next. But the difference is if you look at like 2017, where you could buy on that moving average and just buy and buy and buy. See this line, this 19 moving average was moving up the whole time. It was in an uptrend. So in an uptrend, you want to look for long positions. In a downtrend, you want to look for short positions. So when it's trending up, when it's curved up, has an obvious, upward slope to it, that's where it's a good place to look for long setups. If you look on the flip side, when there's downtrend and this thing is curved down like this, oftentimes when it comes up to touch it, it's a really great place to go short. So for example, if you'd have shorted right here, you could have shorted Bitcoin at like $9,900. Rode that thing all the way down to 5,800 before it put in tweezer bottoms and put in a reversal signal, right? If you'd have shorted here, it got stopped out. So what? You won once, you lost once. Made a huge gain, would have had a small loss here. Could have reshorted it here, made a bunch of money. Look at this, rode it down from 7,300 all the way to the bottom at 3,300. So it's just a really great line to watch. Now, speaking of lines, somebody on Twitter asked me about this, or at least they mentioned it. I don't think they're really asking me as much as just kind of mentioning it. They showed me another YouTuber's video. I'm not here to piss on other people. I'm not here to trash other people's opinions. So, I'm not going to name the person or anything. I'm just going to say this. In this video, this particular person was using two moving averages. I'm not even going to say what the moving averages were, but in their mind, because one of these moving averages was crossing the other one, it was a bullish signal. I'm just going to tell you guys this. One problem that I see with the crypto space is they like to invent their own TA. They like to find these things that they think, they are some kind of magician or some kind of genius, and they've discovered something that nobody else ever figured out. Okay? While that is possible, and there have been some things that I myself have put together, actual setups that I put together, a combination of events, for example. If you're talking about one single factor, not a combination, but one single factor, and you think that nobody else has figured it out, you're delusional, okay? So for example, in this person's case, they're talking about two random moving averages crossing each other. And what happens is these guys often confuse cause and effect, right? If I put two random moving averages on here, I'm just going to literally make this as random as I can. Let's say that I put a 14, and let's say I put a 37. Just two random numbers. Here's a 14. Here's a 37. Oh man, look at this. When that 14 crosses that 37, that's a buy signal. See how price went up after that? Oh man, see how that 37 crossed that 14 going down, or that 14 crossed that 37? That's a sell signal. Look at this. Price dumped almost 10% after that. Oh man, look, see how that 14 crossed the 37? Shit, if I'd have shorted there, I'd have shorted 8,800. I could have wrote it to the bottom. Now, that's not reality. Those crosses mean absolutely nothing. The fact that price happened to go down after they crossed and happened to go up after they crossed, that's actually the cause. The price moving down is what caused the moving averages to cross. So the moving averages themselves are not the cause. They are the effect. They are the result or the symptom of price moving. When price moved up here, that caused the moving averages to cross. So it's very important that you understand there are a few different moving averages that are generally accepted by most traders, and because they're accepted, because the crosses are accepted, many people will trade them and they become a self-fulfilling prophecy. For example, when the 50 moving average crosses the 200, that's called a golden cross. People know that's called a golden cross, and they're going to trade it like a golden cross, and that's why it causes the price to move up, because people are trading it that way. And if the 50 crosses the 200 moving down, it's called a death cross, and people will trade that way. It will often result in people shorting a market, and they will drive the price down. So again, it acts as a cause. But when you take two random moving averages, not enough people are using them to create the cause. So they're not going to have an effect on the market. Instead, the market is going to be the cause, and the moving averages are going to be the symptom or the result of that cause. So I wanted to point that out because it's extremely important that you understand that you can put any two random moving averages on there and you're going to have crosses that look like they matter, but they actually don't. I feel like there's probably something I'm forgetting, but I'm going to go ahead and wrap the video up there. If I wake up later today and I'm like, oh my gosh, I forgot to talk about XYZ, I'll shoot a second update video for you guys, okay? Please remember that I am obviously some guy sitting in a spare bedroom, so nothing I'm saying in the video is financial advice. Nothing I'm saying is investment advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up, subscribe to the channel. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn technical analysis so that you can learn to trade for yourself. This is James with Crypto Common Sense reminding you to trade safe.